Okay, hello. Um, I thought that I would like to go through uh, today's price action and review each a little bit. This is pre-New York session as of now, so I'm still looking to get in into a trade, but the problem is obviously that you got some. I'm pretty sure there's yeah PPI news and Fed speech as well, so we need to stay uh, alert in terms of those news. But let's just quickly review Euro USD price action. How is it looking right now? So basically, how this um, today is playing out is that you got like a little bit downtrending Asia session, but then mostly consolidation. You sweep then Asia lows, and some people like to trade the way that when market sweeps Asia lows, they want to see for a break of structure and then long. Um, Now, if you trade like M1 structure, then you probably would have lost today. But as you can see, we never really see break of structure to the upside in M15 or M5 charts, where I usually want to see that for the setup to be even relatively valid. So, and the price action was absolutely horrendous in this area, so we just didn't want to indulge in anything. Um, so I just basically let the market drop, and we could have easily identified this drop and did why did it happen actually. So you can see this low here. Let's actually mark that out with the highlighter. So yeah, this is important low because this low creates 4-hour fair value gap here. So we understand why market wanted to shoot down here before it's doing anything else. Uh, and so yesterday we came far up, almost reached this high, but we actually were not able to get that near at the end of the day. So let's see how many pips that is actually. 6 pips, so it's relatively close. There's a lot of liquidity at these highs now, so we want to target them. Understanding the fact that strong push to the upside, choppiness for our fair value gap visited, strong push to the upside as a reaction from that fair value gap. Now these are all signs for us to go long, targeting these highs that we want to see get swept. Now the question really is how we are, and everyone has their own strategy, and some people are able to indulge in these kind of trades a little bit easier. For me, I need to see proper retracement, understanding how this market structure is playing out right now. I'm not really sure whether I trust in this as order block. So if I trusted this as order block, we could go long immediately from here. Now I'm not probably willing to do so, because if you look for M30 chart, what do you see here? You see exactly the same things. For our fair value gap visited, you shoot away, break structure to the upside in M30 charts even, and then you leave this fair value gap open here. So like in ideal situation, you would want to see market revisit this fair value gap to go long. Now there is like quite often I find out that when I look at these kind of trades, it kind of just leaves these fair value gaps open and just runs. I don't know. In which case, this kind of M5 structure could easily hold uh, and shoot up from this area. You know what I'm saying? So stay on note for that. And some people could even like go split the risk in half, so to say, meaning that they could, let's say I wanted to risk 1% in total. I could enter in a position in here, risking 0.5%. And if that lost, then I could, so, you know, position like this. And if that didn't play out, then I could get into another trade in this fair value gap here. So that could play out, and that could be a possibility. But in that kind of situation, you can never really get this trade without taking a loss at first. And if you take only one trade, then the winners are going to be um, smaller. So you need to understand how you uh, spread your risk and what is actually worth it. So in my case, I'm still looking at this fair value gap, and I'm not going to enter longs in here. Only valid reason to enter a long in here could be if you had your stop like much lower, which you could easily have. Looking at the like M15 structure, okay, I don't like the fact that there is so many fair value gaps. So we realistically want to see, for example, this fair value gap left open. So you could have your stop at that fair value gap low or high, but I don't know. My general idea when I trade M5 is that in these kind of situations, I want to see like immediate push to the upside, immediately market breaking structure to the upside in M5. Now it happened only in here, and this is problematic sometimes because when M5 structure has a lot of momentum, as in here, not that often is it going to give you a deep retracement immediately, which you obviously see that it's a little bit of a problematic situation, but you just need to continue reading markets as you understand them and trusting your analysis and hope that, and it will retrace, but you need to stay alert. Also, I could give you something that I learned yesterday because I was kind of frustrated in the markets and I basically missed a good setup because of that. Because you know, when markets opened, it didn't really look good. So you can see I didn't trade London. Uh, this could have been a possible long. I don't know if I would have taken that anyways. I'm quite reserved with London session, but New York session I love the trade. So looking at the New York session, what I kind of did wrong here is, well, the main setup that I would have wanted to take happened in Asia. Sorry, not Asia, AUD USD. But similar stuff happened in EU, but we would like to go to AU for this study. So let's take a look at AU there, AUD USD. So basically, what do you have here? Well, I never trade London during AUD during London. So this is kind of, I don't really trust this, and I like to see London as a liquidity for AU. So for example, these lows can be seen as a liquidity. That's a continuation from the trend that Asia really established in here. So we kind of just continue the upside as Asia established here, creating this range. Now, what I learned is that, and I've been understanding this for a while, but not like really consciously, if you know what I'm saying. Uh, Especially in this kind of situation when London just trends heavily to the upside, and 15:30 is usually the time when we have to start have like start getting the volume for New York session. Uh, and what you can notice here is that shift from London to New York in this area, we don't have retracement, we don't have consolidation, we just continue immediately to the same direction we were going in during London. And this is a good sign for the fact that maybe later in the day we are going to see a shift in structure and going to see either shift in order flow immediately, or then some type of retracement that we could indulge in if you wanted to get shorts. And this is exactly what happened here. Um, Different situation it would have been if, okay, let's say London session ends here, we shift in New York, and it kind of consolidates, gives you some type of retracement. Then this could have been either a sell or buy, depending on the fact that how the higher time frame looks like. But when London trends like this, shift in New York doesn't give you any type of retracement. There's nothing really, it just pushes, pushes, pushes. It's like market is very high in premium right now. So in these kind of situations, you have to understand that we could have a volume later in the day. And that's exactly what ended up happening. You break structure to the downside later in the session, and we would like to mark that out like this. So yeah, you break structure to the downside. This is super valid sell setup. This is the fair value gap to enter from. You could even have quite tight stop, and there your liquidity target could be this one, and that would be around 3-hour trade. And you know what I'm saying? This is a good trade, but I missed this yesterday because I was frustrated on the fact that we just continued higher and this never really gave me a setup. But what I learned yesterday is that I can't get frustrated, and I need to understand that when you are so heavily in premium, there is a high likelihood of chance that this is going to shift in order flow, make a market structure shift, break a structure to the downside, whatever you call it. And so that's exactly what it did in here. Similar setup printed in EU as well, and although not that clean, GU didn't give it that great of a setup. But just think about it. If it shifts structure in this kind of scenario and then just shoots to the upside, yeah, that could happen. But as I understand daily cycle and order flow, and especially in these pairs that like to move in Asia and New York, uh, usually in these kind of pairs, London is a little bit more like a liquidity for them, whereas like Euro USD uses Asia more like a liquidity because it doesn't move that great in Asia. So when London kind of trends like this, New York continues trending, the likelihood for us breaking structure to the downside and that trade actually playing out cleanly is quite high and much higher. So that's what I learned yesterday, and I hope that you have also learned something.